This is Phase Ed Music.
Morning. CPI, retail sales, recession. your sub. Yeah. All right. Gotta find my music. Where's it coming from? Oh, I found it. All right, I guess we get going. Comme allez-vous? How are you? No, Sky Killer, tell me all about it. All right. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. However, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Cool. Hey, good morning. My name is Wayne. I will be your guide on this journey. Please ask questions, get involved, click the thumbs up button. Come on, man. Yeah. Let me know how I can help. I am here to serve you. Technical analysis, fundamental analysis, it's all good. I've been trading for a couple of decades. I've learned a few things over that period. So, again, let me know how I can help. Today we have a news event, so I think we should just kind of like cruise to it and then cruise through it, break it down, and then build ourselves back up. Cool. Many resources are available to you besides these free daily live streams at Forex.Today. I recommend you check out tradersway.com only if you are searching for a trustworthy and ethical foreign exchange broker. Fast execution speeds, narrow spreads, huge swaps. Traders Way. No, in all honesty, they've earned my loyalty and respect. So I recommend you check them out. I run an organization called Quant-in-a-Box. It automates your macroeconomic research. So you get things like this. Yeah. Cool. Investor Bootcamp, $88 a year. Allows you to access 88 hours of training videos. Yeah, 88 hours for $88. Seems pretty logical. You should check them out. They're actually pretty good. Yeah, believe it or not, eh? And then TradePlans.ai. You fill out the form, hit submit, check your email. You already have feedback on your trading plan. Yeah. You'll get an overview for a daily point of view, a weekly point of view, and a monthly point of view. And it happens in seconds, and it's totally free. You should check it out. I mean, it's truly amazing. You should check it out. TradePlans.ai. All those links are in the description below. You should take advantage of those resources. Oye, mind up. Oye. Here we are. I don't want to talk about Aussie Kiwi. Morning, Frankie. Let's start with commodities. Okay. We have oil down. Sweet. We're getting into a point where I'm interested in buying it soon. Okay. It's falling to the point in which I may want to buy it. Cool. That's my WTI. S&P 500 is coming down as planned. Next stop is around 42.50. I already have it here. I don't know if we'll make it that low. My next buying price is around 4,100 to 4,000. I don't actually want it to fall that far. If it falls farther than that, I have some serious thinking to do. Cool. So anyway, so this might be a buy zone. I think it should come down, and maybe in 2 weeks I'll get more serious about buying it. Bitcoin. I had a Bitcoin yesterday. Somebody sent it to me. Thank you. And I sat on it for 24 hours. It didn't do anything, so I cashed out of it. Now I got USD. So that's that. So I did my best to hang on, but nothing happened. And look at this. Nothing has been happening for an extraordinarily long amount of time. Trend is slightly down, so I don't want to hold it long. So anyways, whatever. Give me my money. Give me my money. Gold, okay, has dropped down. Remember, our target is 19, and I believe we have officially hit it. The low was 1901.78. Okay, but we're getting there. We're getting there. So, yeah, the harder target, if we were going to do this mathematically, not psychologically, and remember, the markets are very mathematical, but more psychological. So someone might just bail at this because it's 1900. They don't necessarily say 1891.39. Okay? Yeah, that makes sense, Sky Killer. It's just a target, another way of looking at it. On houses, is there also a CAD play? Well, first of all, we have a lot of CAD news this week. Sure. If oil is down because of the correlation, yeah, that's exactly how you trade on how. That would be the logic. Now, remember, the Canadian economy is a lot more complex than just trade oil, just follow oil. There's a lot of data this week out of Canada. And despite oil going up or down, depending on your time frame, CAD will just possibly do CAB, right? So anyways, pay attention. Yeah, Sky Killer, the RBA meeting minutes and the Fed meeting minutes. Yeah, those are the two big reading assignments of the week. Chinese news too, yeah, but sort of benign. Here's how I explained it today at Quant-in-a-Box. By the way, everyone here can get the information for free because I love you. You are my sweet baby, and I want to take care of you. You are important to me. I think you're special. You can go to youtube.com/@Quant-in-a-Box. And so I discuss it here. So if you're a subscriber, you already know this. Okay? But check that out. Okay, one of the things I talk about is that China is in recession. China has negative inflation, what we call deflation, and they cut some form of loans, some form of money, whatever the form is, they've cut it by 0.15. Now, how much does the Fed move interest rates? 0.25. Some, like Bank of England, are moving 0.50. So let me ask you, if the world, Sky Killer, is falling into recession, and China's going to save us with their massive stimulus plan, is that it? Some form of loan available to some people has been cut by 0.15%. So then, yeah, then whatever. I talk about it at great length, though, in that video. You should be a subscriber to Quant-in-a-Box, everybody. It's amazing. Yeah, if you haven't added any artificial intelligence into your trading routine, you are being left behind. Do you understand? If you're just the same kind of trader as you were 2 years ago, you are being left behind. Now, artificial intelligence doesn't have to trade for you, but you need better research, you need better planning, and it's very complicated, time-consuming stuff, and in many cases, very expensive stuff. And now through artificial intelligence and the cloud, a lot of the hard, dirty work that you were not doing and couldn't do in years past because it was too difficult, too hard, too expensive, is now fully automated. And if you haven't incorporated this new technology into your routine, you will be left behind. You're already a dinosaur. And I say that to spur motivation. Quant-in-a-Box is amazing. You need to get on it, otherwise you will be left behind. TradePlans.ai is astounding. And it's free and you're not using it. What the heck is wrong with you? Okay? You need to check it out and put it into your routine. It's amazing. It's very valuable information. You should try it. No joke. Where you're going to be like grandpa that still has never used an Uber before. You're like, dude, do you understand that it was 13 years ago that was new, right? You still have somebody drive you to the airport, use an Uber. Well, but I don't use Uber. I mean, like that kind of stuff, right? You don't want to be left behind. Huh? You need to take advantage of it. Mostly because I see that even many institutional investors are now not informed. So this becomes your alpha, your strategic advantage, that for like a lousy $80 a month, you can be more informed than many hedge funds that spend hundreds of thousands of dollars per quant. And now you can be more informed than them. That could be the source of your edge. Okay? Yes, Sky Killer, from what they write. Remember, Sky Killer, each central bank is different, so there isn't one answer. So let's do something like, do I have it open? I have it open. All right, let me answer Sky Killer's question because he's asking specifically about the central bank tab. Okay, so let me open up that tab and then let me click on Euro. And he's like, okay, here's the projection for Euro going out all the way to 2025. Where do I get this information, Sky Killer? The ECB. What is the ECB's guidance? Tell me about the ECB guidance for interest rates in the future. Have they told us up? Have they told us down? Have they told us sideways? But you're asking, where do we get it? Like literally what table on what? Okay. Look, they're all different. The ECB has told us there is no guidance. No, not, they all need more information, Sky Killer. There's literally no guidance from the ECB. So this is the interest rate as they have told us. We can't, Quant-in-a-Box can't predict the future. It's not a predictor. It's factual. So the ECB has given us no guidance. Now, the soft data says she has also told us they are not going to cut. Now, I can't plot not cutting, but it's in there. That's the human side. So they're definitely not going to cut between now and 2025. And they've given us no guidance. Now, what's the chances they're going to raise? I'd say 100%. But we don't know that factually. That would be your guess. How does this compare to Australia? We have a cut in the third quarter of 2024. How about Canada? Their cut is in the fourth quarter 2024. United States, even different. Okay? So this is just factual information. And it's not like they all have the same data set for us. So we have to basically have like 9 different ways of gathering that kind of intelligence. And then with that information coming in, we have to build our own tables and populate the tables with these 9 different types of sources of information. And from that, compute it and then make a graphical representation so that you have an ability to cycle through the central bank guidance and be able to get their outlooks. So just that little table, just that little process I just showed you is actually very complicated. Okay. Okay. So anywho, let us go back to, so yeah, oil's coming down. We already know that. I'm getting more and more interested in buying it. Stock market's coming down. We already know that. Bitcoin's flat. We already know that. Go to the short-term indices. Yen is weak. That's great. Dollar's still hanging on to its strength. That's really good. Swissy's still strong. Great. CAD, not sure. But remember, this week we expect a lot of volatility on the kitty CAD. The British pound is strong today. And in general, what we're learning is that they have high inflation. And we know that. But the UK was on the precipice of deflation, negative growth. Not deflation, I should say negative growth, so negative GDP. So recession, but high interest rate, high inflation levels and, high interest rates. And so there was a point there where maybe the Bank of England wouldn't want to raise interest rates much higher because what they've done is already kind of working, but what they've done is already kind of pushed them into recession. So more would be, potentially killing the patient. Well, now we find out it's stabilizing. Good. Boom. Hit them with more rate hikes. So that increased in potential rate hikes is attracting a bid. That's right, Gattaca, for sure. Yup. Although, what a terrible name, though, huh? Okay, looking at the longer term. Oh, yes. A little Batman. Ah, yeah. Where does he get those wonderful toys? All right, so anyways, the 0.15 stimulus is not enough to save Australia. One thing we did in Quant-in-a-Box this morning is cycle through some commodities like iron ore, copper, wheat, corn. We even talked about frozen concentrated orange juice this morning. Yeah. Take a look at some metals. We haven't done this for a while. XAU is way down. Palladium is an interesting one. Okay, XPD. Let's see what it's paying right now. Huge positive swap by shorting this asset. Okay. So you could sell XPD. So you want to sell it high. And every day you collect a huge positive swap. it's like an asset-backed security. It's a bond that pays you a yield backed by palladium. Cool, dude. Can you imagine? You're at a party, and someone's like, hey man, how's it going? How's the trading going? You're like, oh man, I put some money into an asset-backed, an asset-backed security. Palladium and collecting a huge swap. Anyways, I traded this earlier in the year when it was moving down, and it pays a lot, in fact. But it's expensive, obviously. It's a precious metal. It's not like they're cheap. Like, the one thing I like about gold is it's cheap. Nope, nobody ever said that. Okay. If you do silver, it's much more retail because it is cheaper. So we have a double top, okay, another top, and now maybe a breach to the downside, also following disinflationary trends. The target for silver this year is 16. Whoa, what? Yeah. Dropping from 26 to 16. That's a big deal. All right, so we got some retail sales coming. Retail sales. Mamma mia, oh so mia. Where do you get your retail sales report from? Anybody? Where do you guys get your retail sales? Hello? Where do you get your retail sales? 2 people have answered. Really? 2. Thank you, Johnny. Census.gov. You guys that are using other sources, you're still behaving like a retail investor. You need to start changing your behavior. CNN told me. And then they told me what I should think about it. What? So anyways, you should have, why go there when you can just get the data yourself? Inventory slightly down. Trade down. That's not good. So it should come out in the next few seconds. Load in, load in, load in. All right, so here we are, August 15th. The numbers are out. Yay! May, June, July. Yeah, there we go, guys. I've been talking about this for a while. People can't afford to buy a new car because interest rates are too high. What the Fed has done is starting to work. And then you'll see the next thing that'll happen is prices will be slashed so that they can dump their inventory of new cars. So you can see we have all retail sales, and then without the autos, so there's sales are up, but this might be gasoline. We don't know. Okay. But when you include autos, it's negative. Like it's really bad. Like that industry is in a world of hurt. Meanwhile, they've invested their whole wad into going electric. Hopefully they can survive a downturn. No more tables? I guess we can look at some of this. All right. Let's take a look. May, June, July. Total percent to change. Okay, department stores are down, of course. Nobody does it anymore. Gasoline prices look like they've come down. Interesting. Okay, improvement there. That might change, of course. That's much easier to track. This was probably back when oil was still 70. Now it's 80 something on the way to maybe 100. Yeah. Healthcare is still very inflationary. Okay. Building supplies. If you can't, let's say you were going to buy a house. You looked a couple of years ago and you were pre-qualified, everything was good. Now you go back to the bank and you will need a new pre-qualification letter, and two things are likely to happen. One, the bank says, we're not going to lend you any money. And you're like, but I was pre-qualified 2 years ago. And they say, well, that was 2 years ago. Credit standards have tightened. Or they say, we pre-qualify based on your debt to income ratio, half of what you used to be able to get. So last year we would lend you $1 million. and it would cost you $5,000 a month. Now we're going to lend you $500,000 and it's going to cost you $5,000 a month. See, it's the $5,000 a month is the issue. $5,000 a month only gets you a $250,000 to $350,000 house, depending on what the actual rate is. And you're like, but I need $1 million. They're like, you can't have $1 million. You should have bought 2 years ago when money was free. Well, money ain't free anymore. So anyway, so if you don't buy that house, you're not going to fix up the bathrooms and fix up the kitchen and replace the windows and put a new roof. You're not going to do any activity. And so we're starting to see that. Now, professional builders are still building new homes. But as far as, you know, an average person buying an existing home, that ain't happening. We're starting to see that. And if you're not buying a new home, you're not buying new furniture. Actually, yeah, gasoline is a bigger part. Look at that. A 5 print. That's pretty high, huh? So you have to buy that. But you don't have to buy a house and furnish it. I wonder what this is about, though. Interesting. And you don't have to buy a new car. Okay? This discretion over your money. You don't have to do these things. And it looks like people are not. That behavior is new. It has something to do with people, how they feel about the future. It changes behavior. If you felt everything was great, then you would behave in one way. If you thought the future was going to be bad, you'd behave a different way. And then, of course, most people are somewhere in between. But attitudes might be changing. So it's like, it's interesting how they break some of this down. It looks like maybe the gas station itself, and if I'm wrong, leave a comment, but the gasoline stations themselves, I believe, are not doing well. So why is it? We used to go in a gas station and grab a pack of cigarettes and some what else do people buy? I don't know. I don't spend a lot of time at gas stations. Whatever, you buy stuff. Potato chips. You're going to get a hot dog. Okay? But right now, you're either not going to the gas station, or when you go in, you're not buying a hot dog or a pack of potato chips. Okay? Why? Okay? Is it, you know, I don't know. Is it because you are spending more on gasoline, I guess, is the idea, right? Anyways, yeah, it's interesting. So you spend your money on gas, but nothing else. Okay. Go back around. I want to take a look. That's right. That's right, Angel. I call it a fade. Okay. So we're back at this 44.44 target from a million years ago. Yeah. Today's bearish target is 44.48 to 44.34. Luis and Frank thought the data was good. You guys thought retail sales was good? Well, if prices went up, let's say 1%, and retail sales went up 1%, is that good? And then another month goes by, inflation's up 1%, retail sales goes up 1%. And then it does it again. Eventually what will happen is inflation goes up 1% and retail sales goes up 0.7%. That's bad. No, what we know, Frank and Luis, what we know is that prices went up. So if everything else stayed the same, then retail sales will go up. So you want to be a little more astute than just look at the headline number. At the very least, take month-over-month inflation and subtract retail sales. So you might do like this. At the very least, you take the retail sales, MOM, REIT SAL, okay, M over M, month over month. Okay, you take that number, I'll just make up a number, 0.7, right? 0.07. And then you subtract inflation month over month, okay? And maybe it's 0.2, okay? So in real terms, it really only grew 0.05. Okay, so there's that at the very least. Then you want to look at the change because this number might actually be falling in real terms, meaning as inflation goes higher, it's eroding what's actually happening, even though the numbers are growing. But lastly, what does it mean if we have a negative number for something like cars and a negative number for housing? Is that good or is it bad? Negative number. Joshua, people can't afford to buy a car. People can't afford to buy a house. How is that good? Well, what you're talking about, though, is a recessionary demand destruction. So you're talking down the road, but you wouldn't say it's good now. So you wouldn't say, oh, people are struggling to buy basic things, right? Like a car or a house. Everybody needs a car, everybody needs a house, but nobody can afford it. Well, that's a problem. Now, in the long run, yeah, that would be disinflationary, but that's not good on the short run. And that will also lag. So inventories of cars have to build up. So at the end of the year or next year, as inventories are piling up, then yes, then car dealers need to slash their prices. But if we're in a recession, credit will be destroyed. So now let's say a $100,000 Porsche you can buy for 80 grand. And the car loan is cheap. So Porsche Finance will lend you the money at 1% instead of 9%. But then credit standards are so high that nobody reasonable can access that kind of money. Which is probably pretty good because you don't want poor people driving brand new Porsches. Certainly won't make them happier. Certainly won't make them richer. So anyways, it will take a while for that, Joshua, to turn into a positive, but ultimately it is what is needed to some extent. But what we're talking about now is there's this headline number and people go, oh, that's good. Retail sales are up. That's good. And all I'm trying to point out is that's like kindergarten thinking. We need to be a lot more astute than that. Okay? Samuel says, I need to register for boot camp. Okay, go ahead. Okay, so I'm just challenging you to think a little harder. Look at the data and think a little harder. There are negative numbers in the positive number. Right on, Joshua. And thanks for, having the guts to put it out there and allowing me to, to hit you over the head with a hammer. I appreciate that. It takes guts. Yeah, very little reaction to it now. So we'll have to wait for the stock market to open to get this moving. Remember, all the adults are on vacation. Only the interns are in the office trading. So there's no institutional trading right now. It's all us kids. So be careful. Realize we're in many ways we're trading alone. So I'm going to go let you do your thing. I will see you at 4 p.m. if you're in my Stop, Look, and Correct session. Okay? So if you're in my day trading group or my swing trading group at investorbootcamp.com, I will see you at 4 p.m. I have to keep this one short today, so I'm not going to go on a 3-hour rant. I promise you that. So, have a wonderful day. You're good people. I appreciate you. Peace on earth. May the pips be with you. May your profits be above average. Okay? Ciao. Ciao. Ciao.